Have you ever looked at the world of Forex trading and just felt completely lost? Like everyone's speaking a secret code made up of numbers and weird jargon? Well, you've come to the right place because in this explainer, we're going to hand you the official decoder.
I mean, you see something like this on a screen, and what are you supposed to think? It looks like some kind of complex math problem, right? But trust me, stick with me for a few minutes, and you'll be able to read this just as easily as you're hearing my voice right now.
So that's our mission today. We are going to crack this code. We're going to take the language of Forex trading and break it down piece by piece, term by term, so you can finally understand what the conversation is all about. Ready? Let's jump in.
Okay, first things first. Before we can understand the game, we need to meet the players. And in the world of Forex, the players are the currencies themselves.
Now, these right here are the heavy hitters. We call them the majors. These are the 8 most traded currencies on the planet, all coming from big, stable, global economies. Think of them as the A-list celebrities of the currency world. They're super liquid, which is just a fancy way of saying tons and tons of money is moving in and out of them every single day.
So you can kind of put currencies into different buckets. On one side, you've got those stable, high-volume majors. On the other, you've got what we call minors or exotics. These come from smaller or emerging economies. Now, they can be a lot more volatile. Their prices can swing wildly. And because fewer people are trading them, they can be riskier and more expensive to trade.
Okay, here's the first big rule you got to know about Forex. Currencies are always quoted in pairs. You can't just buy dollars. You're always buying one currency by selling another one at the exact same time. So let's look at how that's actually structured. The first currency you see in any pair is called the base currency. It's basically the star of the show. So if you're looking at Euro USD, the euro is our base. Everything else in that quote is all about the value of one single euro. And the second currency? That's the quote currency. Its whole job is to be the price tag. In our Euro USD example, the US dollar is literally telling you how many dollars it's going to cost to buy that 1 euro we were just talking about. Simple, right?
All right, so we've met the currencies, and we know they come in pairs. Now let's get our hands dirty and dissect those numbers we saw at the very beginning. It's time to look at the anatomy of a real Forex quote.
Every single quote actually has 2 prices. The first one is the bid price. This is what the market is willing to bid to buy the base currency from you. So if you want to sell, this is your price. And you'll notice it's always the lower of the 2 numbers. And on the flip side, you've got the ask price. This is the price the market is asking for if you want to buy the base currency. So it's your buying price. And just like we said, it's always going to be a little bit higher than the bid price.
Now that tiny little difference, that gap between the bid and the ask, that has a name. It's called the spread. And this is super important. The spread is basically the built-in cost of making the trade. It's how your broker makes their money. And figuring out the spread is dead simple. You just take the ask price, 1.2815 in this case, and subtract the bid price, 1.2812, and boom, the result is your spread, 0.0003. But what do we actually call that tiny unit? We call it a pip. A pip is the smallest standard unit of change in the Forex market. For almost all currency pairs, it's that 4th number after the decimal point. Yet that is incredibly small. If we're talking US dollars, that's 1/100th of a single penny. So in that last example, the spread was 3 pips. This tiny, tiny unit is the building block for every single profit or loss you'll ever make in trading. And just when you thought it couldn't get any smaller, well, it does. Some brokers want to give you even more precision, so they use something called a pipette. It's just 1/10 of a regular pip, taking us out to the 5th decimal place.
And you can see the difference really clearly here. A move from 1.2345 up to 1.2346, that's a 1 pip move. But a move from 1.23456 to 1.23457, that tiny jump in the 5th spot is 1 pipette. It's all about getting more granular pricing.
Okay, we are almost there. Let's cover the last 2 big concepts. Margin and leverage are really the engine of Forex trading. They're the tools that let everyday people like you and me get into this massive market without needing a fortune to start.
First up is margin. The best way to think about margin is like a good faith deposit. It's not a fee you pay, it's just a bit of your own money that your broker sets aside to open your trade and keep it secure. For example, let's say to open a particular trade, your broker says you only need to put up $50 in margin.
So that $50 deposit, what does that actually allow you to control in the real market? It gives you the power to manage a position that is much, much bigger. $10,000. That's not a typo. Your 50 bucks can control a $10,000 position. And the magical tool that makes this possible? That's called leverage.
Leverage is usually shown as a ratio, like 200 to 1 in our example. It's an incredibly powerful tool because it amplifies your trading power. But, and this is a huge but, it's a double-edged sword. It amplifies your potential profits, sure, but it also amplifies your potential losses just as much.
Phew! Okay. We've talked about pairs, bids, asks, spreads, pips, margin, and leverage. We have collected all the keys to the kingdom. So, it's time. Let's go back to that confusing puzzle we started with and finally crack it wide open. Remember this thing? GBP/USD, 1.8812/15. I bet it doesn't look quite so intimidating now, does it? Let's break it down once and for all.
Okay, let's lay it all out on the table. The base currency is the British pound, GBP. The quote currency is the US dollar, USD. The bid price, what you can sell 1 pound for, is 1.8812 US dollars. The ask price, what you have to pay to buy 1 pound, is 1.8815 US dollars. That 15 is just shorthand. See, you can read it. You actually speak Forex now.
You know, the writer Samuel Smiles once said, "To think we are able is almost to be so." And that really fits what we just did. You decided you wanted to understand this seemingly complex language, and by doing that, you've already achieved it. The code is officially cracked.
Think about it. Just a few minutes ago, you saw a confusing mess of letters and numbers. Now you see a detailed financial quote with layers of meaning. You've learned the fundamental grammar of a whole new language. So the only question left is, now that you can speak it, what conversation will you start?